Hi everyone, welcome to today's video. So take a look at this particular email. This is ITC making its dividend announcement, and I as a shareholder received this email and I got super happy. I started dancing with joy because money was hitting my bank account. It's a great occasion. People start celebrating, and ITC is one of the prime reasons why a lot of retail shareholders celebrate, because they are getting dividends. So it's a great feeling to have. So I thought that I will shoot a simple video explaining 5 assets that I own that give me regular cash flow and whether or not it makes sense for you to purchase these assets. So I'm going to have a complete discussion, and towards the end of the video, I will tell you 2 of my favorite assets out of these 5 where I'm increasing my holding, because these are some of my favorite passive income sources, so to say. So let us get the video started. Also, a very quick disclaimer that I make roughly 1.5 to 2 lakh rupees a month through dividends through these passive income cash flows. Why is that? Because I have a big portfolio. So I have constructed this portfolio over several years. Now it has become big. Therefore, I am getting cash flows in the form of dividends. So that is a simple answer to how do you make a lot of dividend income? You need to have a big portfolio in the first place. That is the honest answer here. Now let's move on to talking about 5 assets. But let me first and foremost take you to Screener and show you how to create and filter out stocks as per their dividend paying abilities. So what you simply do is that you go on Screener and click on this screens, and then you click on create new screens. Then you type dividend yield greater than 3%. So you will get a list of all these stocks. So there are 104 stocks, and now this gives you a list of stocks that are paying more than 3% dividends. Why did I pick 3% dividends? Because the general consensus is that if a stock is giving more than 3% dividend yield, then it is considered to be a decent dividend paying stocks. Now, one obvious question here would be that, hey Akshat, I see some of the stocks, for example, Balmer, it's paying 10.02% dividend. I'm also seeing something like Taparia Tools, it's paying 1088% dividend. So should I not be investing in these type of stocks? Please watch this video. I have done a complete discussion whether it makes sense to purchase dividend paying stocks or not. So in case you don't have time to watch that entire video, let me present a very quick summary in 1 minute. So the entire idea is that how do you make money as a shareholder? So there are 2 ways in which you will be making money. Let's assume that you have purchased ITC and you are a shareholder in ITC. Then the 2 methods would be that number 1, the stock price, which is trading at 244, it goes up. So it goes up to 260. You are sitting on a profit of 16 rupees per share. So this is called as asset appreciation, and this is the first way you can make money. Second is that the company decides to pay out a part of their profit in the form of dividends. So this hits your bank account directly. Now you might have a counter question that, okay, there are stocks that are not paying any dividends, or they are paying very low dividends. Should I avoid them completely? Will I be making any money? What happens in that scenario? So you'll find a lot of stocks. For example, Hindustan Unilever pays very little dividend, but is it a bad stock? The answer is no. Why? Because there might be asset appreciation of that stock. That is the reason why people are purchasing Hindustan Unilever, TCS, or Page Industries, so to say. These are all good stocks that do not pay very high dividends to begin with. So I want to put out a very clear disclaimer that just because a stock is not paying high dividend does not make it a bad stock. So please do not believe in that, because even a stock that is not paying out dividend can undergo this asset appreciation. So it becomes very important. So this brings us to a related concept that should I go and purchase a stock like Taparia Tools? It is giving out like 1088% dividend yield. Should I go and buy it? The answer again is no, because what can happen? The reverse can happen. For example, there can be asset price depreciation. The entire stock that you had purchased, that stock can literally go to zero or become really low. I'm not giving a pro or con on Taparia Foods per se. I'm just telling you that that's a scenario that happens very, very frequently. Again, go and check my video. You will get a complete understanding. But moving on, I hope you get the point that number 1, high dividend paying stocks are not necessarily good stocks. Low dividend paying stocks are not necessarily bad stocks. So with that out of the way, let me present 5 specific assets that I own in my portfolio that are giving me good passive income. Now the first asset is ITC. Why do I own it? There are 3 specific reasons why I own ITC right now. First is that it is a high dividend paying stock. So every time money hits my bank account, so I feel super happy. I start dancing. Not literally, I'm a horrible dancer, but figuratively speaking, I start dancing. So it's a high dividend paying stocks. It gives me regular cash flow. It stabilizes my cash flow, so to say. Majority of the other stocks that I own are not dividend paying stocks for me. So ITC becomes a prized possession for me from that particular perspective, that at least I'm getting some regular income from the stock market. This is the first key reason. Second key reason why I own ITC is because I I am bullish about ITC's FMCG business. Now I have made a separate video on ITC, so you can go and study that video in detail where I have broken down the business elements of ITC. But very quickly recapping that ITC has two prominent major business lines. There are multiple business lines, but two prominent. One is the tobacco or the cigarette business. Majority of ITC's revenue comes from tobacco or cigarette business. It is a market leader. It is a monopoly. That's the first business line. The second business line that is growing for ITC is the FMCG or the staples business. Now here is a very quick look. It shows you the market share that ITC enjoys even in the notebook market. So 25% of share is owned by a brand called as Classmates, which is owned by ITC. Same goes for the instant noodle, that approximately 23% of the market is owned by Yippee, which is a noodle brand which is competing against likes of Maggi, etc. So these are two brands that are coming up from ITC's domain. As the FMCG or staples business of ITC grows, ITC's stock will also give appreciation. That is the hope with which I am holding ITC. Let me know in the comment box that do you think that ITC will give a run up or not give a run up. I would love to hear your viewpoint. Now comes the third reason why I own ITC. So ITC is a defensive stock. It is a stable stock and it has a very clean management. So I'm sure that none of us would question the management of ITC. It has not had any issues in terms of accounting or some fraud has happened at ITC, all that stuff. So it has clean books. Similarly, ITC is a defensive stock. For example, when it comes to banking, finance, something like Bajaj Finance, if the market moves up by 2%, Bajaj Finance usually moves up by 4%. But if market falls by 2%, then Bajaj Finance falls a lot also. So stocks like Bajaj Finance are highly aggressive. On the flip side, ITC is a defensive stock. Therefore, I own it because majority of my portfolio is growth portfolio. It's aggressive portfolio. So I hedge it by buying stocks like ITC. In fact, ITC is so stable that whether the market moves up, down, it just stays consistent. Okay, let me show you this chart. So 1 year ago, ITC was trading at 240 rupees. Now again, it danced around all this while, and then it came back to 244, 245 rupees. So the bottom line being that ITC keeps on dancing in that range only and it keeps on paying dividends. Now, why is that happening? Will ITC stock grow or not grow? Again, please watch my video. You will understand more. But there is a major risk with ITC stock and there is a reason why it keeps on dancing around in that range. The reason being that ITC's major business, which is the cigarette business, it is highly dependent on the government policies. If government decides to increase taxation on tobacco or sin products per se, then a company like ITC is going to suffer a lot. So that is the fear that people have, especially in this type of an environment. When government needs to make money, it will probably go and tax companies like ITC more. So people are a little bit scared. So therefore, ITC stock does not give much appreciation. So that is the simple reason of not holding ITC. So bottom line, should you be holding it? I've given you a pro and con analysis. Now tell me in the comment box, will you be owning ITC or not? Let's move on to the second asset that I own in my portfolio, and the asset is NMDC. So if I take you back to that chart and I will zoom it here, please take a look that NMDC gives a dividend yield of 9.73%. So again, NMDC good yield. Just a very quick background of the business, that NMDC is owned by the government. That is the majority shareholder in NMDC. It's National Mineral Development Corporation. Essentially what the company does is that it extracts iron ore. It also has diamond mines. It is getting into processing of steel. So essentially it's in the iron ore business and it's a monopoly stock in that domain. Now, why do I own NMDC? There are three specific reasons. One is that it is a monopoly stock. Monopoly stock means that it is a dominant stock in one particular industry, which is iron ore mining. So this is the biggest company in India from an iron ore mining perspective. It's a natural resource. Government has massive control over it. But you will say, Akshat, you are against owning PSU stocks and you are not an investor in IRCTC. It is also a monopoly stock. So why are you owning NMDC vis-a-vis something like IRCTC? Okay, let me explain that very, very quickly again. That when it comes to something like IRCTC, who is the end consumer? The end consumer are people like you and me. We are Mango people, and IRCTC is a B2C business, business to consumer. So we are consumers directly consuming from IRCTC. So government will face a lot of heat if it increases the ticket price, because Mango people like you and me will get affected. When it comes to something like NMDC, NMDC is mostly a B2B business. It is supplying iron ore to whom? So after processing steel, the steel is not used by you and me directly. Steel is rather used by industry and big factories, all that stuff. Also, the related point is that the price of steel in India is linked to international market. So it's not as if that government will willy-nilly increase it or decrease it. Yes, they can technically do it, but it is highly unlikely that Indian government will increase the steel prices when the global steel prices are falling down. This is a commodity stock whose prices are linked to international market and they are selling it to businesses. So from that particular perspective, there will not be a lot of hoopla in terms of increasing steel prices, all that stuff. This is reason number one. Reason number two is that this company has certain bit of moat. Moat means competitive advantage. So here is a chart for you. Please zoom in and see. And you will see the steel production prices in India vis-a-vis the other parts of the world. Now, steel is used by industries all across the globe. India is also using it. There is big demand of steel in India, and the steel production in India is not that expensive as in some other parts of the world. So we are a reasonably okay producer when it comes to producing steel. So from that particular perspective, NMDC is a good company because it can produce steel at a lower price, and therefore our industries also benefit from it. If it happens that the steel production in India is super expensive, then it would rather make sense for us to close something like NMDC than import all the steel that we need from different parts of the world. But we are not doing it. Why? Because we are competitive and NMDC is playing a role in that entire supply chain. Now, the third reason and the biggest reason why I hold NMDC is very simple, that I got to purchase NMDC at a lower prices. For example, if I show you the chart, you will clearly see that NMDC in the last 10 years has gone in a very cyclical format. For example, it goes up, then it goes down, then it goes up again, goes down, goes up, then it forms a curve, then it goes up again, goes down, so on and so forth. So if you purchase it in a downturn, it is most likely going to go up. So I ended up purchasing at the downturn. So I'm okay in terms of holding it and benefiting meanwhile from dividends. And again, just to cut the entire story short, I'm not a big holder of commodity stocks or PSU stocks. NMDC is one of the few exceptions on my portfolio. Now, the third dividend paying stock that I own is Britannia Industries. It also pays out decent amount of dividend. So this is the dividend that it pays out. It's a decent number in terms of dividend yield. Now, why do I own Britannia? The answer is fairly simple. It's an FMCG stock. I have a sector allocation on FMCG, which comprises of companies like Britannia, it comprises of Dabur, it comprises of HUL, it comprises of Nestle. So these are some of the companies that I own in my FMCG portfolio. And ITC and Britannia are two top companies that pay me a lot of dividends. It's again very similar to ITC. It's a defensive stock. Majority of my portfolio is aggressive portfolio. Therefore, I end up purchasing something like Britannia to hedge my portfolio. Should you be owning something like Britannia? Again, if you're looking to take positions in FMCG stock, right now it's a good time to invest in FMCG company. There is no fundamental problem per se when it comes to FMCG stocks. These companies are going to go up. Britannia is a market leader. It has gone up and down, but the stock price growth has been really consistent. For example, let's take a look from 2015 onwards, and it's a very clear trajectory, right? That it was trading at 1500 rupees. It came up all the way to 4500 rupees in a matter of 6.5 years, which is very good growth. No problem there for a stable stock like Britannia. So from that particular perspective, if you're running after a little bit of dividend, if you want to build a slightly defensive portfolio, then having something like Britannia in your portfolio might make sense. Now comes two of my favorite assets to own, and these come from the crypto space. Now please don't drop off. Please listen to this part very carefully because it can give you new knowledge. So please listen to it with an open mind. So very quickly, let me speak about the crypto passive investment option. So if you go on Vault, you can take a look at these particular assets at the bottom of the page, and you can check out that which coin is giving what percentage of return. For example, DAI, it gives you a 12.68% passive income rate. So it's like doing an FD, and you can easily do it through Vault also. Similarly, Matic gives 7.23%. Polkadot gives 12.68%. So let me speak about two of my favorite coins when it comes to crypto investments that can help you generate passive incomes. These are my absolute favorite passive income / dividend sources. But let me give you a very quick concept clarity there. So for example, when you were owning ITC stock price was appreciating and you were making money, or you were getting dividends. Now, same scenario can or cannot play out in the crypto world. For example, if you own something like USDT, then USDT prices are linked to US dollar. I will explain it in a minute what USDT is. So the growth of the asset itself depends on US dollar. On the flip side, the USDT, you can do a 12.68% FD on USDT via Vault. So this becomes like a passive income source for you. Your option 2 is you can go to something like Polkadot. Now here what happens is that it is Polkadot, right? So the FD returns here remains 12.68. Now the asset price itself, like the stock price, can go up or down. So this is a very important point to understand, that there is a difference between USDT and Polkadot from that particular perspective. So these are my two favorite resources in terms of of doing fixed deposit in the crypto world that generates a lot of passive income for me. So let me briefly explain what these two things are and whether or not it makes sense for you to put it in your passive income portfolio. So let me speak about USDT first. So very quickly, let's understand what USDT is, and I'll probably make a separate video on it altogether, but very quick explanation on what USDT is. That USDT in simple terms is called as a stable coin. Now why is it called as stable? Because it is pegged to US dollar. For example, you must have heard back in the 60s, the fiat currency, USD, INR, it was pegged to what? It was pegged to gold. In order to print $1 in 1960, the government used to purchase $1 worth of gold, keep it in their tejori, and then only they used to print it. Exactly the same concept plays out in USDT. So there is a clear linkage between USDT and US dollar. In order to print or release one USDT onto the network, the company that is running the USDT network, it needs to keep $1 in its accounts. Is it keeping it? Is it not keeping it? I will not comment as of now because the video will become really lengthy. So I'll shoot a separate video on that. But yes, there are risks in terms of holding USDT. Don't get super excited that, hey, 12.68% return, I'm going to buy it today itself. No, there are risks. You should not convert everything and convert entire portfolio into USDT. Yes, little bit of exposure to USDT is fine. No problem there. USDT is a stable coin whose value moves as per the value movement of USD. If USD is going up, then US dollar will also go up. If USD is coming down, then USDT will also come down. So that's the pegging concept of it. One related note that you need to understand is that if you take a look at this particular chart, you will see that the value of INR keeps on going down and it's roughly going by 4% every single year. So if you convert your INR into USD and then USD into USDT, what is it that you are exactly doing? You are saving this 4% depreciation. And the second key point that you're saving yourself from is that you now get to do a fixed deposit on vault at 12.68%. So if you would have simply converted your INR into USD, you would not have gotten benefit of this 12.68% FD. But now you are able to do that. So that's the benefit. Is it completely safe? Again, let me put out the disclaimer that no, that USDT is not completely safe. You should put only a little bit of money in something like USDT. Again, if there is enough interest, I will explain it separately. But for the time being, do understand that USDT right now is one of the most popular stable coins. It's not as if that it will become zero tomorrow. Meanwhile, if you want to take a little bit of exposure to it, it is completely okay. Now comes the final asset, which is one of my favorite assets from this list, and it is Polkadot. Now, basically, what is Polkadot? The easiest explanation that I can give on Polkadot without getting into the technical details is this, that Polkadot is trying to become the sun of the entire crypto solar system. What do I mean by that? For example, here is sun, right? This is what Polkadot is trying to become. I'm drawing horribly, excuse that. But what you will notice is that there are different blockchains. For example, there is Bitcoin blockchain, there is Ethereum blockchain, there is Solana blockchain, all that different blockchains are there. They are working individually, developers are creating new ecosystems, applications, all that stuff. But there is no protocol that is bringing all these functionalities together, and Polkadot is trying to do that. So this is the unique part of it. Now, if there is enough interest, I will shoot another video on this. But for the time being, please understand this ecosystem is very valuable and a lot of people are getting excited with it. And Polkadot seems like that it is likely to go up. So meanwhile, you can benefit from it in two ways. One is that if you buy Polkadot, then Polkadot itself can give you asset price appreciation. Second is that again, if you can do an FD, you will be getting 12.68% on vault, and that's great news. So from that particular perspective, these are 5 of my assets that I own in my portfolio where I'm making a lot of passive income. If it fits your needs, if it fits your risk profile, please go ahead and invest in it. I hope you enjoyed the video. Please press the like button and I will see you tomorrow.